Have you ever wondered how to make passive income that adds up to $1,000 per month? Well, I'm about to share with you how I've been able to achieve just that through dividend investing. Dividend investing is a strategy that allows you to earn money from your investments without having to sell them. This method isn't as complicated as it seems, and anyone, regardless of their experience level, can get started with the right approach. Stick with me until the end, and I'll walk you through exactly how I built my portfolio to reach $1,000 a month in passive income. Let's break this down step by step, starting from the top. Here's how I managed to reach that goal using dividend investing. 10. Understanding dividend investing. Understanding dividend investing is essential before diving into the strategy. Simply put, dividend investing involves purchasing stocks from companies that regularly pay dividends to their shareholders. A dividend is a portion of a company's profit that is distributed to its investors, typically on a quarterly basis. The primary advantage of dividend investing is that it provides you with a steady stream of income without the need to sell your stocks. This makes it an attractive option for those seeking passive income. By holding on to dividend-paying stocks, you can earn regular payouts, which can be reinvested to grow your portfolio or used as a source of income. The best part is, you don't have to worry about the volatility of the stock price in the short term. As long as the company continues to pay dividends, you'll receive a consistent cash flow, allowing you to grow your wealth over time. 9. Setting clear goals for your passive income. Setting clear and realistic goals is crucial when building an investment strategy, especially for generating passive income. My initial goal was simple. I aimed to earn $1,000 a month from dividends. Having a clear target made it easier to create a roadmap for success. I broke down this larger goal into smaller, manageable steps, which included determining how much to invest initially, selecting the right dividend-paying stocks, and reinvesting the dividends to maximize growth. Without a clear goal, it's easy to get sidetracked by market fluctuations or feel overwhelmed by the process. By defining my objective early on, I was able to stay focused and motivated. Setting a clear target helps you track progress, make necessary adjustments, and maintain consistency. When you know exactly what you want to achieve, it becomes easier to map out the steps to get there and remain committed to your plan. 8. Choosing the right dividend stocks. Not all stocks pay dividends, and not all dividend stocks are worth investing in. It's crucial to do your research. I focused on companies with a solid history of paying and growing their dividends, as well as those with a good track record of financial stability. Blue-chip companies are usually a safe bet, as they tend to pay steady dividends and have a reliable business model. Companies in sectors like utilities, consumer goods, and healthcare tend to offer consistent dividend payments. A good example would be companies like Procter & Gamble, Johnson & Johnson, and Coca-Cola. These companies have a long history of paying dividends and increasing them over time. By carefully selecting companies with reliable payouts, I was able to build a diversified portfolio that provided consistent income. 7. Reinvesting your dividends. One of the most powerful strategies for growing your passive income is to reinvest the dividends you receive. This means using the dividends you earn to buy more shares of dividend-paying stocks. Over time, this compounding effect accelerates your returns, allowing you to generate more income without additional effort. This strategy is often referred to as dividend reinvestment plans. For example, if you receive $100 in dividends, instead of withdrawing that money, reinvest it to buy more shares. The more shares you own, the more dividends you'll receive in the future, which builds a snowball effect. 6. Building a diverse portfolio. Diversification is key to any successful investment strategy, including dividend investing. By spreading your investments across different sectors and industries, you reduce the risk of putting all your eggs in one basket. If one company or sector suffers a downturn, the others may continue performing well and cushion the blow. I made sure to diversify my dividend portfolio across various industries, including technology, healthcare, consumer products, and utilities. This helped ensure that I wasn't overly reliant on one sector or company, which could be risky in case of market fluctuations. 5. Start small, think big. When I first started with dividend investing, I didn't have a large sum to invest. However, I focused on consistently investing smaller amounts, and over time my portfolio grew. Even with modest amounts to begin with, by regularly contributing to my investment account and reinvesting dividends, my portfolio started growing steadily. It's essential to be patient. Building a portfolio that earns you $1,000/month in dividends doesn't happen overnight. However, starting with smaller investments and gradually increasing your contributions over time can get you closer to that goal. 4. Understanding the importance of dividend yield. The dividend yield is a key metric in dividend investing. It's calculated by dividing the annual dividend payment by the stock price. The higher the yield, the more money you receive from your investment in relation to the stock price. However, high dividend yields aren't always a good thing. Some companies may offer high yields because their stock price is low or they are facing financial troubles. It's important to strike a balance between a solid dividend yield and the stability of the company. A good rule of thumb is to look for dividend yields between 3% and 5%. Anything above 5% may be a red flag and require extra scrutiny. 3. Tracking your progress. To ensure that I was on track to meet my $1,000/month goal, I made it a habit to track my progress. Regularly checking my portfolio's performance helped me understand how close I was to reaching my target. I used online tools and apps to monitor the dividends I was receiving and estimate how much more I needed to invest to reach my goal. Keeping an eye on your dividends and understanding your portfolio's performance is essential to staying motivated and making adjustments when necessary. 2. Tax considerations. While dividend investing can provide passive income, it's important to consider the tax implications of receiving dividend payments. Depending on your country and tax bracket, dividends may be taxed at a higher rate than long-term capital gains. For example, in the US, qualified dividends are typically taxed at a lower rate than ordinary income, but non-qualified dividends are taxed at the individual's regular income tax rate. Before diving into dividend investing, it's a good idea to consult a tax advisor to understand how taxes will impact your earnings. 1. The power of patience. The power of patience is the cornerstone of successful dividend investing. When I started my journey toward earning $1,000/month through dividends, I quickly learned that results don't come overnight. Building a strong dividend portfolio requires time, discipline, and consistent effort. It's easy to get discouraged when market fluctuations cause short-term setbacks, but staying the course is essential. The true value in dividend investing lies in reinvesting your dividends and continuing to invest regularly, even if it's in small amounts. Over time, your investments will grow and the compounding effect will work in your favor. The key is to remain patient and trust the process. The more consistent you are with your contributions and reinvestment strategy, the closer you get to achieving your financial goals. Ultimately, patience pays off, and if you stay committed, the income from dividends will steadily build over time, bringing you closer to your target. If you're looking to generate passive income through dividend investing, remember that consistency, patience, and research are crucial. It might take some time to build your portfolio to $1,000 per month, but with the right approach, you can absolutely achieve this goal. Keep investing wisely, reinvest your dividends, and diversify your portfolio. Over time, you'll see the power of compound growth, and before you know it, you'll be enjoying that steady stream of income. If you found this video helpful, don't forget to hit the like button, subscribe to the channel for more content like this, and turn on notifications so you never miss an update. Keep investing smart, and I'll see you in the next video.